This is Dr. Abraham Joseph from Money Matters. Welcome to the second part of the introduction to the stock market trading. Today we will be covering about the various advantages of stock market trading. There are 6 points to be covered. We will go one by one in detail later. Then also we will be covering about the disadvantages of stock market trading. Again, there are 6 points to be covered. So we'll start it by one now. Welcome to the second day's program. Yesterday we have seen how stock market is operating in India and what are the components and regulatory aspects. Today we shall study about the advantages and disadvantages of stock market trading. First, let us concentrate on advantages of stock market. There are 6 important points to be noted in terms of advantages. First one is about the potential for high returns. See, the biggest problems of rich people or the people who have got surplus fund is that they want to employ their funds. They can employ their funds only with the possibilities of depositing this money into the bank, where bank will normally give 7.5% or maximum 8%. And this is also subject to income tax. Say for example, if you invest 10 lakh rupees, you will get 75,000 rupees. And in that 75,000 rupees, you will have to shell out at least 25,000 rupees if your income exceeds 12 lakh and all those things. So people want to invest their money in an area where high returns are expected. Normally, share markets, long-term investments will fetch 13 to 15% CAGR, that is compounded. So it's more than that also. If you select some best shares, you will even get 20 to 22% of CAGR also. So it is only the stock market gives such opportunities, nowhere else. Even unless and until you are in a big business, perhaps with huge margin, otherwise you will not be able to earn that amount of money with your job, with employment, or with any side business that you are doing. By spending maybe at least 30 minutes a day with the mobile banking, mobile network that you have got, you can do this business from anywhere in the world. The second greatest advantage is the easy liquidity. You can sell the shares at any point of time. If you have made profit, your expected profit is arrived, you can sell it. Or at any point of time, you can sell at the press of a button. So that is the greatest advantage. See, if you have got a land, physical land or gold or any other assets to be sold in the real physical world, it takes a few days, few hours, especially in case of real estate and all, it takes months together to sell. But here, at a press of a button at the market rate, you will be able to sell it and you can make money off that. Then dividend income. See, once you buy any stock or a number of stocks, you become the owner of the company, partially owner of the company to the extent of shares held by you. So, if you are invested in great companies, you will get a dividend every year. And there are few companies which are giving a dividend quarterly. See, these are nothing but the profit that they have earned, and you get a certain part of it either quarterly or annually, whatever it is. So this is additional source of income. And the fourth one is you are the owner of the company. To the extent of shares held by you, you are the owner. So you should see yourself as the owner and employees are working for you. And the fourth one is protection against inflation. As you may be knowing that in India, normally the inflation is 6 to 7% every year. And banks also gives interest to us only to 7 to 8%. So whatever interest they are giving, they are matching it with the inflation rate. So that means we are not earning anything. 100 rupees of today becomes 107 rupees of next year, after 1 year. But whatever you are getting for 100 rupees today, perhaps you will have to pay 115 rupees, 110 rupees for that. But the stock market offers a way of protection against inflation, because the share price will definitely increase to the extent of the inflation plus some amount of profit margin that they make. So that is another advantage. Then the greatest advantage is that see the regulatory bodies like Securities Exchange Board of India, then NSE and BSE, they take maximum care about the investors or the stakeholders. So there are very strict guidelines with regard to the trading aspect, submission of reports by various companies and all those things. So any small mistakes also will be identified, and such companies will be fined heavily for the mistakes that they are committing. So they will take maximum care so that the mistakes are not repeated or mistakes are not happening. So this is another advantage of this stock market. Then let us come to the disadvantages. See, there are a lot of disadvantages of being in the stock market. The main disadvantage is that market volatility. What is market volatility? There is high fluctuations in the market because of the policy changes of different government, because of international happening like war between different countries. Say, for example, war between Russia and Ukraine, war between Israel and Hamas. So one or the other way, somewhere the war is going on normally. So this will definitely impact the business. Either the petrol price will go up, certain things will go up. Sometime certain demands for certain goods will come down. So on account of this, the market will have a high volatility. Also, different government like US recently, US government has come up with new tariff policies when this Trump has assumed the office. So from April 2nd onwards, the impact will be seen. So such policy changes by any government, environmental issues, all will have impact on the market. So, but market volatility is in a way is advantage. If the market remains at the same price for many days, nobody will trade. Market volatility will offer opportunities either to sell or buy. So this is a good indication. But always market will have its high and a low on an everyday basis also. Then risk of capital loss. Unless you study the market and study the stock market and all, there's a possibility of losing your capital, especially if you invest or if you trade in options and futures. There are around 8,000 shares, only 3 to 400 shares are the best shares where you can buy. You have to have a system to identify such stocks. So perhaps in the days to come, I will teach how to identify the best stocks and invest it at the right time. So exit and entry. Entry is important. Entry means buying, and exit is when to sell. These are the important points to be noted. Then there is what is called as emotional or impulsive buying. People suddenly will buy. Somebody will tell, okay, this is good share, or TV will say, this is a good share, you buy. So they will immediately buy. The person who is recommending these shares may have some vested interest. We don't know that. So that's why SEBI has restricted or not allowed people to recommend any shares. But still, people recommend and they will land in troubles later on. So don't buy any shares based on the recommendations or impulsive buyings and all those things. Study it well and then only buy it. So it requires adequate knowledge of the at least minimum things. So that's why it said learn first and earn. See, you won't drive a car on a highway unless you have a driving license, unless you have an experience, right? You won't swim in the well or in the tank, wherever, the river, unless you know swimming well. So first you have to learn, then only, because it's our hard-earned money that you are investing. Then there are government policies. Suddenly there will be some changes in the government policies. And because of the government policies, the prices will favorably increase also, or sometime favorably decrease also. So this is an area. Then tax structure, market conditions, all will influence the prices of the shares. Then the last one, perhaps if I could say, it's about the greedy nature of traders, including me. We are all greedy to at least to some extent. All want money overnight. That's not good. So you have to be very calculative. You should plan before you invest in shares or trade in shares. So before the trade takes place, the previous night or the early morning, 10 to 15 minutes, if you invest and decide, and you can buy it. not when the market is going on, especially on long term investment. You need to study well, and then only you have to buy. So these are all the disadvantages and advantages of stock market. Tomorrow we will study an interesting topic. Thank you very much. Nice of you.